Hi, everyone. Thank you for joining. I'm just going to give another minute for everyone to hop on here, make sure that they got the link. I'm Shaina McAndrews, so you know who you're looking at. I'm going to bring up the presentation. Let's see. All right. Wonderful. So just give another couple seconds here as people log in. Really appreciate everyone joining. I wish you could have been at our in-person event. We had a great time. And we had some of our favorite vendors to work with that our past clients loved working with as well, present at our in-person. Unfortunately, you just have me today, but I'll try to. The good thing about having me is I'm pretty quick. So, and we'll talk about write down any questions you have. I recommend having a piece of paper and a pen next to you so you can write down any questions. And then at the end, if I didn't go over it, you'll want to ask those in your one-on-one consultation. Okay, let's get started. Anyone late can just tune in as we go. And I apologize if I start losing my voice. It's been a week with allergies, etc. But thank you for joining our home buyer seminar here online. And we did have our in-person one, and that was fantastic. And some people I know, I just saw the names kind of pop up as you log in. And some people who attended in person are here again, just because there's a lot of information, and it might be good to listen to it twice, depending on where you are in your journey. Okay. Let's get started. So a little bit about us. Who are we, right? You may know me. I'm Shaina McAndrews. I run the team, Shaina McAndrews team. Just so you know, in Pennsylvania, regulations, you have to have your team name after your name. It's not a vanity thing or an ego thing. So it's the Shaina McAndrews team because we like to stay compliant and play by the rules. So we're licensed in Pennsylvania and New Jersey. And we have partners across the United States and also in 20-something other countries. So no matter where you are, we might be able to help you, whether that's buying property, selling property, renting out property, and investing, commercial property, whatever it is, we may have something for you. We can at least set you up in the right direction. So feel free to follow me on any of those. And I've been in real estate for since 2016, and I love it. Been on the board of directors. As you kind of saw there, I hate talking about myself. So, but you can read my bio anytime. It's on moncoliving.com to kind of find out a bit about my journey to where I am now. And then we have Sam and Jess on the team. Sam is fantastic. Oh my gosh, I love Sam. So I know a couple of you are here from Sam. And you'll be working with her as you buy, sell, invest. Same with Jess. Jess is a new agent, and she's doing great. She just had her first listing. She helps out a lot of renters, a lot of buyers and sellers in our area too. And if you're not paired with one of them, you may be, or we'll work together. Everyone's a little different. Okay. So then we also have our support staff. We have Shireen and Luella on the team. Shireen, once you're under contract, you'll have emails from her and communication from her as she kind of coordinates things on the back end for your transaction. And then Luella, say you put an offer in a house and it doesn't get accepted, but you're like the runner-up offer, and you really like that neighborhood, we may call around to the neighborhood, and Luella is probably going to make those calls for us to kind of shop your offer. And if we're doing an open house, if you're selling with us as well, she's the one, she makes the calls for open houses and brings people out. Okay. So we're a team. It's a lot, agency is very different. And you got to be very careful about which realtor you're working with. I've heard from so many people who became clients, my realtor's not available, they went away, they have no coverage, whatever it is. But that's a very painful thing, especially in the summertime. What happens when my agent's away? Don't worry, we have a whole team. We are going to get you into the house. We're going to be able to show it to you. You're going to have representation. You're going to be okay. And we have support. So no one's completely alone to figure out things that come up, because I can tell you real estate, things change all the time, as we know. Every location is a little bit different and varies. So it's good to have experience. It's good to have connection to other agents to help out with your transaction, with forming and shaping offers, etc. Then we have also, we're always in training. We have a great network of agents that we train with. And so we're always up to date on all the big issues of the day. So you don't have to worry about being stuck in the past with an agent. We're very much with it, and we are definitely in the year 2024. Please do not ask me for a fax number. I don't have one. So, we're very tech forward. Everything's done digitally for the most part, except for closing day, where we've got to put ink to paper. Everything else is digital at this point, and showings are in person too, I should point out. Okay. So I know what's on everyone's mind. How's the market? This is the biggest question I get asked in my day-to-day business. How's the market? So I'm going to give you a little bit about what is happening in our market right now. And there is a market for everyone. Everyone right here, right now can buy a house. We will come up with a plan for you to get there. So this is an interesting graphic. I really love this. It compares pre-pandemic levels to how they've shifted to now, to this spring. And you can see this 5-year shift. Ours has an inventory shortage. What have we been telling everyone? We don't have enough houses. There's not enough on the market to sell. And there's a couple of factors as to why that is. Is it because interest rates are high? Or is it because a lot of homeowners have a really low interest rate and it's just not worth it to move because prices have also increased, and it would be a lateral move. They wouldn't be moving up. So the people who are moving in this market, a lot of them have a reason to move in this market. Their family is changing size, whether it's bigger, smaller, and their housing needs need to change, right? Job changes. That's a big one that always happens. Life events are pretty common, though, for the main trigger for most people right now. Then you can also see there's other markets that they're getting more inventory. That means less people, maybe there's less buyers. Maybe sellers are finally going and making some moves. But these markets are evening out. And you can see that in Florida. You can see it in Texas, Arizona. But we still have inventory shortage for a lot of areas, unfortunately. But I think it's a better time to buy while there's an inventory shortage than when when interest rates go down, because that'll be a lot of competition and prices are going to go up. All right. So what about our market? Let's get specific. Let's talk about Greater Philadelphia here. And I have it broken down into each county. And this is from March to May of this year, so that we can see, hey, what was the spring market like? And I know March is a little early to get the spring market going, but I want to have some data here just to share with you. So let's talk about what these numbers mean. In Philadelphia, it looks like the highest total units listed and sold, but it has the lowest median prices. And that indicates a more affordable market. There's higher months of supply at 3.9 months, suggesting a balance or a buyer-favored market. It's ideal for first-time buyers and investors due to affordability and variety. That's fantastic. Philly's got some areas you can get into. But of course, as we know, Philadelphia is full of micro markets. And you will hear me talk about this all the time, micro markets. You know, when we're looking at how to construct an offer and how we're going to price it, and do we need to compete? Are we going to expect multiple offers on a house? We're looking at these micro markets because Philadelphia has so many different neighborhoods. Some neighborhoods, they can't give enough supply. Others, they're sitting for a while. And that's in every single county. So yes, there's going to be affordable ones in Philadelphia. Probably not Rittenhouse Square, right? That's going to be probably not for first-time home buyer, on the affordability scale. But there's definitely places in Philadelphia that are a win-win situation for our clients. Let's move on to Montgomery County. This is my home county. I've lived the majority of it in different, all over it. And in Montgomery County, we're seeing higher median prices, which reflects an affluent market. There's lower months of supply. We're at 1.9, indicating a seller's market with quicker sales and higher demand. And it's ideal for buyers seeking upscale properties with strong market activity. Like, there's definitely a draw to different neighborhoods in Montgomery County. And, so it might just be where you want to be, but expect to compete. Of course, this changes throughout the county, throughout the towns. Lower Montgomery County is more competitive than Upper Montgomery County, for instance. All right, Delco. So moderate median prices with a balanced market. They're about 1.8 months on market, so a little bit less than Montgomery County. And it's a good choice for buyers looking for stability and a middle ground between high and low price markets. They definitely have a good range for what's available there. When you see the median sold price is at $335, that's a great price. That's a wonderful price for a lot of first-time home buyers. We're going to find them to be like around $200 to $500 for first-time home buyers. So if you're in that market, maybe Delco has the answer for you. Bucks County, higher median prices and moderate month supply of 2 months, indicating a competitive market. It attracts buyers looking for upscale suburban living with a balanced marketplace, and it's ideal for families who are seeking larger homes in suburban settings. You get a little bit more square footage for your buck over in Bucks County. Chester County, high median prices. It's similar to Bucks County with slightly lower month supply at 1.8. This reflects a competitive market with high demand and quick sales, and it attracts luxury buyers and those looking for high-end properties in suburban areas. So I hope that kind of like breaks it down a little bit so you can see on a larger scale of what our market looks like in our area. We are seeing a lot of competition. If you're looking to not compete, there's ways to do that, and we can work with you on your search to have something. If you know you can't compete, you don't have enough cash to bring to the table, so you're asking, we have to negotiate seller assist. That's going to be something to consider in your search. Maybe we should look at houses that aren't just hitting the market and having 100 showings on them. You're going to get buyer fatigue. And we'll talk a little bit more about that. But knowing these market data, this is going to help. This knowledge plus your pre-approval plus our initial consultation together, all of that creates your search to be refined and provides a path forward for your path to home ownership. All right. So I'm going to go over a little bit about the actual buying process. Like, what do you expect when you're buying a house? And the first thing you kind of need to know are some of these terms here. Pre-approval, that's going to be with your bank. We don't want a pre-qualification from Wells Fargo, PNC. Do not show that to me. Oh my God, please don't show that to me. You want to work with a great lender, local lender in our area. And we actually have a great offer for you attending this webinar. We have a great offer for anyone who uses Corey G team at Cross Country. He really helps buyers win their offers as well, so that you have a great team behind you when you're submitting an offer and you're competing. It really helps. And also, if you need guidance, they're not just going to hand you a piece of paper that says pre-approved. You're going to understand what that means. And then, of course, there's title search. Title search is what happens when you're under contract. We're going to look at, who the previous owners were. We're going to look at making sure that everything, there's no surprise liens, judgments on it that needs to be taken care of. And it adds added protection to you as the buyer. An offer, you keep hearing me say this word, that's the agreement between a buyer and seller. We write it on our agreement of sale. So once the seller signs, that offer is not an offer anymore. It is an agreement of sale. It's a contract for you to purchase the house, and you have legal obligations as part of that contract. Then we have contingencies. Whenever we talk about an offer, if the seller's looking for the least amount of contingencies in a competitive situation, everything's a contingency. Home inspection, wood inspection, radon inspection, mortgage being elected. What else would be one? Like if there's anything odd about the property, if we need to dive into the usage or the zoning, those things would be contingencies. Submitting your deposit. Yes, we need to submit a deposit. So there's a contingency in the contract for that. All right, closing costs. Closing costs in our area, they're going to be between 3 to 6% typically of the purchase price. So if you're buying a house, let's use really easy math for me. If you're buying a house, the house is $100,000. You're going to need $100,000 to purchase it, right? Wrong. You need $100,000 plus closing costs. So plus 3 to 6%. So $3,000 to $6,000. And we write up estimates. It's not going to be a big surprise for you. When we're putting in an offer, we've run estimates for you, and they're going to be pretty close. Okay. Then we have home inspection. That's when you have a professional home inspection company come in and they conduct a home inspection. And we'll talk a little bit more about that. Disclosures. The seller needs to provide a seller property disclosure. It's a pretty long document that goes through systems of the property and years of things, like if they know when the roof was done. Not everyone knows this information. Maybe they've only lived in the property for a few years and the roof was done in like 2010. So they don't have that information to disclose. But let's say they've had water in the basement. They're probably going to put that on there. In Pennsylvania, it's a common enough problem. Most of the time, it's just something simple to fix. So those things are really important when you're looking at a house. Now, if it's an estate sale, there's not a disclosure. It's just signed by the executor typically, and there's no further information. Then we have an appraisal. An appraisal is not for the buyer to understand the value of the property. The value of the property of the buyer is what they're willing to pay to purchase the property. The value to the lender is what the appraisal is needed for. The lender wants to make sure there's no funny business going on, and we're not saying, they're not over lending on a property. So they'll come in and they'll have a third party person who's an appraiser perform an appraisal. Then we have closing. Closing is when you get the keys. It's when you bring the rest of the money after you have your deposit early on. You bring the rest of the money, nice and easy, and then you have your earnest money deposit, which is that deposit money to solidify the contract early on. All right. So your steps to buying a home. And we're going to dive into each of these. You have your consultation, and then we're going to talk about financials with the lender. And then we're going to finalize your search. We're not searching before your financials. It doesn't make sense. It's a waste of time. It's a waste of my time. It's a waste of your time. And then we talk about making an offer and what that entails. The inspections, if you have them elected versus having them waived, and what it looks like to have an inspection done and what to expect. And then the appraisal, what to expect, what happens when things go sideways. Let's talk about it. And scheduling your move. Of course, that's the big important thing. Get your movers, get your boxes packed, get everything ready to go. If you've got kids, get them excited about the move. And then we have closing. All right. So right now we're all in the prep phase to buy a house, and you're here. Congratulations. You're doing step 1. We're on our buyer consultation. Now, we're talking about the process here, which everyone needs to do with me. But the next thing you're going to do is do your qualification call. And that's either going to be with me, or if you're already kind of started talking to Jess or Sam, you're going to work with them and they're going to do a call with you. So when we're doing this call, we're going to ask you questions. We want to know about what's happening in your life. What do you want to achieve here? And the lender that we most often work with, Corey G, he's going to ask the same thing. He wants to know what you want. Are you going to just buy this house and that's it? Are you going to buy this house and then in a couple of years buy another one and like keep moving up? We've got clients like that. Great investment strategy. Do you want to talk about investments? We have another investment seminar. I'll have one scheduled soon. So just keep us in the loop if you want to be invited to that. We'll try to keep everyone in the loop as well. But we want to talk about that. We want to know what your goals are. We want to know what you need. Like, for me, do I need 1 bedroom, 2 bedroom, 3 bedroom? How many bathrooms do I need? Square footage? Do I need a lot of space? Am I not going to take care of a lot of space? So I need a little bit less than that. I don't want to fill a lot of space, right? That's expensive. It's expensive to heat. It's expensive to cool. Some people love a lot of square footage. For me, I don't need to waste money on that, right? I've got different goals in life. I want to own lots of properties, not just one large one. So we want to find out things like that about you. Then we're going to do an off-market search for you. So we connect you with Zenlist. Zenlist is our favorite little search engine there. We'll set that all up for you. And then you'll see off-market searches as well in there, which the general public cannot see. And that's another win for when you're working with us. And then we're going to talk about in our consultation how we can leverage what you want and how to leverage that in a competitive situation. If you can compete, we may have to have the realization that you can't compete. Not everyone can. But it's good to know instead of burning out. All right. And we're always here for you. So during this consultation, we can have more consultations if it's needed. Sometimes it is. So just hang in there. We're going to get you through it. We're going to get you to where you want. We're going to help you achieve your goals. So the big thing, financials. I'm going to share this file with you. Please download it. This is, thank you, Corey and Matt over at the Corey G team at Cross Country for providing this. It's a loan document checklist. So I'm sharing it right now. Please download it. You're going to see all the documents that you need for your loan approval. And it's really important, as I said, to work with a lender who knows what they're doing. Sam actually has a great story. I wish I could put her on. Sorry that our technology just doesn't allow that right the way we're doing this. But Sam had a client who was approved with a different lender, and they kept running into issues. And they're like, well, why can't we get the pre-approval letter? Why can't we do this, that, and the other thing? And this lender kind of dropped the ball drastically. Like, she hadn't told the client about the grant programs that are available and all these other things that he had to do to get the grant money. Because there's grant money out there, but sometimes you got to do something, right? So working with a lender who works for you, right, doesn't just give you a piece of paper saying you're approved for $200,000. That's not helpful to us. $200,000 where? Can you do $200,000 in a really expensive part of Delaware County where the taxes are high? Or can you do $200,000 in Abington Township where the taxes are pretty low? Because what it comes down to is you're not approved for $200,000. You're approved for a monthly amount. You're approved for $1,500 a month between PITI, principal, interest, taxes, insurance. Okay. If you're paying under 20%, it's PITI. It's principal, interest, taxes, insurance, and premium mortgage insurance. Because if you're under 20%, you're paying PMI. Don't let that deter you from buying a house, though. That would be really, really financially silly. So what you want to do is talk to a lender who actually knows what the heck they're doing, understands the area as well as I do, because when we're talking about these different areas, they all have different taxes. If we're looking at a house in Cheltenham School District, and it's let's say $350,000, $400,000 house, taxes might be $800 a month on property taxes. So that's a huge portion of your PITI being eaten up, your monthly budget. We don't want that. So talking with your lender, coming up with a game plan, understanding your pre-approval, they do that with you. They have a great program to understand what you're trying to do, what you need to do to get there. And sometimes the answer is we need a couple months before we can start searching. And that's a great answer, because if you don't get that answer, you might be working on the wrong things during those couple months. All right. So there's a lot of mortgage calculators online, and it's kind of an okay place to start. But I will tell you, like, when you don't know what you're doing, you're probably doing it wrong. So you can, if you just want an estimate, just for, fun, or to kind of get an idea of something, send us a link. Send Sam, Jess, or I. Just text us like a link to a house that you like. Just send us the property address, and we'll run it for you. We'll run an estimate. I'll show you what it means, like if you're an FHA buyer, if you're a VA buyer, if you're conventional, how much you're putting down conventional. We can work that out. And if you're a cash buyer. All right. So it's never too early to start working with your lender. Start working on those documents. If you are self-employed, you need to start talking to the lender tomorrow, because it's a bit more of a process than like someone who's a W-2 employee. W-2 employee, you're super easy. You're nice and easy with your pre-approval. Us 1099s, though, we've got to get your P&L up to date. You've got to get your tax returns in order and make sure you didn't write too much off. All right. And now, of course, down payment. There's down payment assistance programs. Corey G's team, they're going to walk you through, and his contact information is on that document. If you want an introduction, Sam, Jess, or I can send you an introduction to them. And just let them know that you're working with us, because it helps us have a kind of a wholesome conversation together about your journey and what we're going to do. But you can put as little as 3% down. If you're doing USDA and you're kind of out further away from the city, more rural areas, you can do a USDA loan and put barely anything down. If you need anything. VA loans, if you're a veteran, they have programs out there that you don't need to put anything down. And of course, that'll come from your certificate of eligibility. All right. So what are they going to do? They got to check your credit. I wonder if you guys know what your credit score is. If you tell me the number and you tell me a number that's 1,250 is your credit score, you don't know what your credit score is. So you can go, and your FICO score is going to be a little different. So, like if you have a credit card, and let's say you have like a PNC credit card, and you click on the app and you're like, oh yeah, what's my FICO? And it says a number there, 760, we'll say 760. Okay, cool. And then when you go to get a mortgage, that number may not be 760, because they're going to run the 3 credit bureaus, and they're going to use their middle number. Okay. So it may not be 760, it might be 720. Because different things are reported to different bureaus sometimes. Sometimes they all line up and they're just like 1 or 2 points difference. But yeah, it's never too early. And the great thing about these guys, they're going to do a soft credit check. Not all lenders do a soft credit check. Why do we like a soft credit check? Because it doesn't hit it hard. It's not doing a pull on your credit. So just a soft one to kind of have your score, see all your information. That's the best thing. But you definitely want to be 580 and above for your credit. And it's not, again, like it's not too early. If you know you're under 580 and you're like, oh my God, I'm never going to get a house, talk to them. They're going to pull you. If they see a soft credit check, they're going to be able to tell you, like, they may even say like, okay, if you do this, that, and the other thing over the next few months, your credit's going to jump. And some people think paying something off is going to help their credit. It doesn't. The biggest thing that comes up is student loan debt. Do not pay it off, apparently. That seems to be the most common thing. Don't pay it off, because it may tank your score, because it may be one of your oldest pieces of debt that you have creating your credit history. So it might be something you need to pay off at closing, and that'll help sometimes. If you pay it off at closing, it doesn't tank your credit score, but it frees up money for available use to have on your pity for your monthly balance. All right. So talk to the lender about that. If you're not, and then if once you're pre-approved, we also need on our side, we need a BFI, buyer financial information form. And we'll talk about this in our consult. It'll be part of our next steps with you. We'll send you this form to fill out. It needs to be submitted with any offer, and it shows your assets, liabilities for purchasing a house. Okay. And then if you're a cash buyer, we need proof of funds. So we need a bank statement that shows enough cash for purchase price and closing costs. All right, fantastic. So finding a home. So we're going to set you up in Zenlist. Zenlist is fantastic. We can communicate in there. We can share information. And that way you can ask a question. You don't have to feel bad. If it's 9 o'clock at night, you're not texting me. I don't want to text at 9 p.m. I'm reading. I'm watching a stupid movie. So don't bring me out of it, right? Send me a message in this app because the app won't bother me. I'm like, okay, cool. But, and if I know I have a lot of clients who work night shifts. A lot of nurses, a lot of people in manufacturing, etc. So Zenlist is a great way. You're never going to bother any of us, and communicate about the houses in there. You can write a note on the house. You can share it in a chat with us. But it makes your search a lot easier. And if we're having a tour day, like we're seeing a couple homes at the same time, we're going to put that in there for you for a tour. All right. So, sorry. Yeah. So touring, yeah, home search tips. So yeah, make a list of all the things that you really need and want in your new home. This should be something like you got to have your must-haves, your needs, whatever you want to call it. And then you're like, I can compromise on these things. Because you do want to be flexible. All right. Home searching tips. So when we're in the house, first of all, don't take out your phone and start taking photos right away. You don't know if you like it. Walk around, understand the layout. Picture I like to do the first floor first and then go upstairs to the bedrooms. Do the bedrooms work, right? Not all the bedrooms are made equally. Some of them are really small and you're like, hey, that's not going to work for my 2 kids. They're going to fight because the room sizes are too unequal. So, but after you like it, then go around and take photos. You're like, oh, this is the house for me. All right, take photos of it. After we know, like, hey, this is something I want to move forward on. If you need someone else to see it, to make a decision, video call them in. Make sure they're ready when we're seeing a house and video call them in. We have a very set amount of time to be at every house. We can't go over. We can't be late. So, keep that in mind. We're not there to hang out for hours and hours. Most showings are about like 3 minutes if someone doesn't like it, to about maybe 20 minutes. And I know that might sound crazy. Some people are like, I can't make a decision in 20 minutes. After you see a couple houses, you see a bunch of houses, you'll be able to kind of make decisions and analyze things better and quicker. Plus, a lot of people, they search online first. And so you've been seeing houses for all this time. And so coming into a house, you've already seen a lot of what's out there on the market. You're going to know, oh, that's this is the one for me. I've seen a lot of houses I like, but this one I like. The other thing, focus on the things you can't change. You cannot change the neighborhood. You can't change the lot, location, or the size. And changing like rooms, knocking down walls and everything, sometimes it's easy, sometimes it's a pain. So be cognizant of that. Focus on the things you can't change. Are you okay with those things? Look at the neighbors. I always look at the neighbors. Is that someone I'm going to be okay living next to? Or, ooh, they've got a lot of stuff all over the place outside. Like, are they bringing mice in? Are they attracting critters because it's messy? So you want to be cognizant of those things. The next thing, when we're walking through, if you're liking it, like, we'll test some things. We're going to make sure, like, is there water pressure? Ladies, all you ladies know, we need a little water pressure to get our hair washed, especially if you have thick hair like me. Like, the little trickle is not going to work. And if there is a little trickle, is there a plumbing issue? Do the pipes need to be snaked, or is it bigger than that? Are they galvanized pipes and they've kind of shrunk over time? So it's good for us to kind of walk through, really take note of things, flush the toilets, make sure it's nothing slow with the plumbing. Slow plumbing tends to mean that there might be some kind of issue. It might be a small issue. I know my sink gets too much hair in it from my showers and stuff, and I'm always snaking it with a little thing, once a month, when it starts to trickle a little slower. So it could just be a deferred maintenance item. All right. So you like the house. There's great water pressure. We're all happy about that. Electric looks good. Everything looks great. It's time to make an offer. So we're going to hopefully already have our strategy in place as to how to place you in an offer situation. But I'm going to run through some of those things that we talk about. And now many offers are going to be due on Monday or Tuesday. They used to be due on Sunday a lot of times, but that's kind of gone away. But if we're seeing a house and it's Friday or Saturday, there's no reason to wait, because I have seen houses. I've had a listing for when, we had offers due on Monday, but the seller can accept one at any time. And we had an offer come in 80,000 over asking, and my seller, they're like, hell yeah. So they took it. And all those other buyers, they were so sad, right? And I was like, well, you guys didn't come close and you weren't going to. So things like that happen. Don't dilly-dally. Don't think you have a lot of time. But as soon as the house is, usually we get a coming soon phase. We can't see houses during something coming soon. We can see them when they're active. And when they're active, we can go and we can schedule a showing beforehand. You want to get in on day one if you can. If it goes active on Thursday, we're there on Thursday. If it's active on Friday, we're there on Friday. Don't wait till Saturday to see it unless that's the first day of showings. You're welcome to go to open houses too. You just say like, hey, I'm working with so-and-so, and that's fine. Okay. So making an offer is an art. And it's an art that involves a lot of negotiation. And so many times when you submit an offer, the seller may counter it. It might be a counter like, hey, we think interest rates, your maximum and minimum on your document needs to be a bigger range. And that's fine. That's usually fine. Or your earnest money deposit is kind of low. We want a 4% earnest money deposit, meaning like if it's a $100,000 home, they want to see a $4,000 deposit. And most first-time home buyers, you may lose out on an offer or two. It depends, how strong you are. And we'll talk about that. But this is why do not get emotionally attached to something you don't own. Don't get emotionally attached until I hand you the keys. You've signed the paperwork. It's closing day. And I say, congratulations. You are now the owner of this property. You are the caretaker of this property. This is yours. It's no one else's. It belongs to you. Then you can get a little emotional about it, right? But things happen. And I need you to be prepared. Like, say we have a home inspection. I need you to be prepared to say goodbye to the house. If I say, this is one of the worst things that you could ever buy, you can't afford to make this, to get out of this health hazard or whatever it is, you've got to walk. I mean, you don't have to, but if I'm advising that, you probably should, right? And we talk about all those things when we're under contract. When we're looking at houses, I'm pointing out things that need to be done, right? So hopefully the home inspection is not too much of a surprise. All right. So offer variables. What does it mean? What are we talking about? These are all these are the main variables in most offers in our greater Philadelphia market that we're talking about. So I need to know the offer price. Are we going to do an escalation clause? What about earnest money? It's typically 3 to 5% of the purchase price for the earnest money deposit, and that's going to be due within 2 to 5 days. What does that mean for you, buyers? It means that you need to have that money. If you're shopping in a price range, let's say you're shopping at a $300,000 price range, you need to have maybe $15K in your checking account, minimally $9,000, so that you can write that check within 2 days and submit it. And if it's under 30 days, we need to go to your bank and get a certified check, or you need to wire the money to the listing office if they have that ability. So don't put it in an account that doesn't have a bank nearby. I know we all love our online banks. I love Barclays. They've got great interest rates and stuff. Ally is a big one. But if they don't have a branch in our area, you can't get a certificate. You can't get a certified check. So it's a harder process. So think about where you're banking, especially if you're here and you're like, I'm 6 months out from buying. I've got my lease isn't up till November, and I can't get out early from it. Then this is the time. Go open up a bank account. Go to PNC or wherever that has banks in the area so that you can make this process easier for yourself. All right, loan financing type, that's part of the contract. That's why we don't look at houses if you don't have a financial plan in place. You can be our client, you can go to open houses, but until we have that, you can't make an offer. So it's all pointless. So we need to know who your lender is. We need to know what kind of financing you're doing. They want to know if it's conventional, if it's FHA. Why? Because conventional is easier on the appraisal than FHA. FHA requires, and they may require things to be done. 3 steps or more, no handrail. They're going to make you put a handrail in. And of course, those are negotiable items between buyer and seller at the end of the day. But we talk about financing type, that the sellers need to agree to that. You can't pull a fast one and be like, oh, we'll put conventional on that, and then but we're really going to just do FHA. So you can't do that. You can't lie on this. This is a really important thing. The next thing is down payment. So you have your down payment matters. Like, we're putting this in the contract. You're willing to pay $80,000 in your down payment. We need to know your loan to value ratio. So are you doing like a 20% down loan? Are you doing 5%, 3% down? We need to put that money there. We need to show your loan amount. Appraisal coverage. So oftentimes on offers, we're putting, hey, in case of a low appraisal, we know you asked for $400,000 for this house, but in case of a low appraisal and we're at like 430 on our offer, we're going to come up with that 30,000 additional. Or we're going to say, we have enough cash, it's okay. We're going to waive the appraisal. We need it for the loan, but we're going to waive the need for it. Because we can pay cash if we need to, if it doesn't appraise for some reason. Okay. Then we have the settlement date. Yeah, when is it closing? A lot of houses in our market are 30-day closes. So that's pretty fast, right? We see a house and you move in 30 days later. Well, close in 30 days. You don't need to move in right away. You can have a couple weeks or whatever you want to do. If you're refinishing floors and stuff, you have some time. Proof of funds. This is the BFI. We're going to talk about that individually. It'll be on your next steps email after our initial consultation, our one-on-one consultation. The transfer tax is a negotiable item. So if you are in, let's say, we'll use Abington Township again. If the house is in Abington Township, transfer tax is 1%. The buyer pays 1%, the seller pays, because it's 2% total. So we can negotiate and say the buyer's going to pay both of those because, we're being competitive. And sometimes that's a little bit better than raising the offer price. Okay, contract contingencies. So you can have other contingencies in there. There's, it's unlimited as to what you can come up with. And then we have our inspection strategy. Sometimes we limit our home inspection. We'll be like, okay, we're going to get it done in 5 days. We'll have a response to you on that 5th day. And we can't ask for anything under $1,000 per item. That's a really great limitation on it. It shows the sellers you're not going to nitpick over stupid things like GFCIs, right? Seller's assist. This is if we talk about your consultation, we're in a competitive market. I showed you that graph. I showed you the map of the United States. We're in a competitive market. So asking for seller assist does not help you in a competitive situation. Don't even bother, right? Don't bother competing unless it's against 1 or 2 offers. Maybe you'll get it. But look at different, we're going to help you look at houses that may be okay with seller's assist. Focus on houses that have been on the market a little longer. And then there's a limit to seller assist. Seller assist can only go towards closing costs. It cannot go towards down payment. It's very important. It can also, it can go up to, if it's an FHA loan, you can have up to 6% seller assist. If it's a conventional loan and you're putting less than 10% down, it can only be 3%, up to 3%. And then if it's over 10% down, conventional loan, you can put up to 6%. Okay, so, and that's a negotiable item, but not for a competitive situation. So definitely plan to have your closing costs, but if you don't, we're gonna have our one-on-one and talk about your strategy, where you're looking, because your micro market may be fine and may be common to have seller assist, right? There's a lot of places in Philadelphia, for example, that have seller assist on their contracts. And then the other thing that can help you with your offer is a buyer letter to the seller, right? That's great. And so we can highlight that letter, and then your offer highlight letter is what I write, what Sam writes, what Jess writes, and it's really nice for the seller to digest the information of the offer, but also allows us to give you some personality and say how wonderful you are. All right, and then you have your pre-approval letter. That's part of it, of course. And they don't want to see a big bank. I'm telling you this now. If they see Bank of America, any of those big names, your offer is probably going towards the bottom of the pile. And then we have our lender call to vouch. So if you're using one of our partner lenders, they're going to call. They're going to call the listing agent and be like, hey, let's talk about this pre-approval, just so you know you have a great offer. And then, of course, some sellers require a rent back. So if there's a reason they need to stay another 2 weeks after closing, that may be something that we negotiate with them. Okay, escalation clauses 101. So I mentioned escalation clauses. This is the biggest thing. So we have two offers. It's on the same house. Both have the same offer price, $950. They have the same loan product, same down payment, same inspection option. But one of them has an escalation cap of $50,000 over, and one of them has a $45,000 escalation cap. And they're both in 5,000 increments. The house on the left there, they win the house, right? They won the house. They're at $1 million, and the other one lost it by $5,000. So, and there's obviously not everyone can use an escalation clause. If you don't have the cash to kind of like pay that balance of the 50 grand there, like these guys, it may not be as good of an offer as the one at 45,000 who's like, we're cash, right? All right. Inspections. A lot of people waive them in a competitive situation when you're competing against 10 offers or more. Even if you're competing against 3 offers or more, a lot of people waive them. We can limit them, but it's going to be whatever's comfortable for you. And every house may bring you a different comfort level. Okay. You want to plan to be at the inspection. They're typically about 2 to 3 hours. And you ask the home inspector any questions. It's a great way to kind of understand your house too. But remember, they're not going through walls. They're not doing any of that stuff. Okay, final stat. So we have the appraisal going on. What happens if it's a low appraisal? It gets renegotiated. So unfortunately, if you don't have the cash to cover the appraisal gap, the seller's not coming to accept a lower offer. They're like, we'll just put it back on the market. You're out that money for the appraisal. You're out that money for your home inspections if you had them. So that part stinks. But usually, and sometimes it comes in under, and then I dispute it for you. But I typically, when I'm giving you an offer recommendation, I'm looking at the market data. And if I say like, I'm pretty sure I can get the appraiser, I can dispute it up to this amount. I'm going to give you opinions like that as we go and recommendations. But definitely one of those scenarios. I'll tell you if we need to worry about it, but don't worry about it before you get there. Most people don't have that issue. Okay. That's not if usually we address it early on. So closing and moving. You are not going to move on closing day. Repeat after me. I am not going to move on closing day. So please do not plan the movers the day of closing. You can put all your stuff in a U-Haul truck, but make sure you have that U-Haul truck another few days, just in case you need to keep it on that truck and stay at, on your friend or cousin's sofa for a few days if we have to push closing. Okay. But closing, it's pretty quick. So we can close at the house. We can close at our office in Bryn Mawr, our office in Lafayette Hill, close at the lender office here in Lafayette Hill. There's a bunch of different places around. Lansdale, we've got a place. So we closing. If you're using one of our preferred lenders, if you're using like Corey G, it's going to be 15 minutes of signing. If you're using another lender, it might take a little bit more. If you're using a big bank, expect to be there maybe all day. Okay, so the closing, you're going to need your ID. You're going to bring your cashier's check, or you're going to have wired the money earlier that week to the title company. All money goes through the title company at closing. We're not handing money to the seller. All money goes into the title company. Your lender sent the money to the title company to send to the seller. And the title company is paying off the previous mortgage from the sellers. If they had any judgments on it, tax liens, they're paying those off at closing. Okay. The closing is pretty quick. We do a final walkthrough beforehand. Sometimes like when we're closing at the house, which has been a really great work. It's been working great recently. So we can close at the house and do our walkthrough right beforehand. And the final walkthrough is like 15, 20 minutes. It's me going through my checklist, making sure everything's working. Okay. So yeah, time to move. I'm not going to move on the day of closing. Like if you need to move on the day of closing, you need to have a conversation with Sam, Jess, and I ahead of time. Okay. And then of course it doesn't stop at closing. You're going to come to our client appreciation events. We want to see you. We want to find out about your home project. Stay in touch with us. Keep in touch with us on social media. Go to, whatever, just join us out. We're always going to neighborhood events, etc. But we like to do client appreciation events. This is from the previous spring. We did Bury the Hatchet. That was a lot of fun. So we hope to see you there at our next one. And then, of course, you can always read our reviews. I think a lot of my clients have been like clients for life. I loved working with them. I love working with them on repeat and helping their friends, their family. And that's like the most rewarding thing to have happen. So your next step, what are you going to do? You're going to schedule your consultation. So please, take out your phone right now and schedule your consultation. This is your initial consultation. Some of you have already had your initial consultation. I know what you're looking for, so we may not need to do it. But others, you got to get this done. Let's go. Schedule it. If you're working with Sam or Jess, you can schedule with them directly. And I'm going to share my home buyer guide with you. Okay. So that has a lot of the information that we went over just now. And I hope that it helps you out to refer back to. I will send out a replay of this so that you can, if you need to go back and look at anything, you're welcome to. And I really appreciate that you guys came here. I can't figure out how to see questions. So if you wrote anything, we're going to be in touch. And look out for other webinars. We're going to do one. If you're interested in investing, we've got one coming up. If you're interested in selling your home, that one's coming up as well. We try to do these every once in a while so we can get everyone on the same page. But yeah, schedule your next step. Get your consultation going. If you want an introduction to Corey G's team, please reach out. If you downloaded that loan document checklist, you can reach out to him directly. It has his company information on it. Don't just go to Cross Country Lake. It's all different there. So you make sure you use Corey G's team there. But yeah, thank you guys so much for attending. I really appreciate it. I'm probably going to lose my voice. I did go through pretty quickly, I think. Yeah. So wonderful. Thank you so much, guys. And have a lovely rest of your evening.